Hi, good morning, everyone. Welcome to today's webinar, meeting the minimum standards for Lloyds, and specifically for cyber third-party management. My name is Richard Jeffries. I'm client manager for insurance at Northdoor, and I'm joined on the webinar by Darren Craig, who's the CEO of Risk Exchange. So, Lloyds minimum standards is something that you'll all be very familiar with. It's a board-level agenda item. And arguably, cyber third-party management is now more important than ever. It's not just because cyber's an ever-evolving, changing threat, but also because the market over the last year has become much more digital and connected. That's been forced on the market by the pandemic, as well as the modernization initiatives. And so with the connected end-to-end processes comes challenges around cyber management in that supply chain. We've also had the breach at DXC last summer, which is a reminder of the cyber threats to the market that can be present for those shared service providers. So it's a very important thing to get right. And so how do you do it? I mean, you'll all have initiatives, process technologies in place that are addressed at this in your organizations. And what we're going to go through today is a framework for assessing and managing cyber risk in the third parties, which we hope you find useful and that you can think about adopting in your own organizations. The webinar itself is going to take about 30 minutes to 40 minutes, so not the full hour. And you will have a Q&A button on your screens to submit questions as we go through. And we'll cover those at the end. Just move my screen on, there we go. So just a quick word on Northdoor. We've been around for a while in the market. Hopefully you know us to a degree. We've got a sample of our client logos on the right-hand side there, you can see. And in the center, you have the wheel of our capabilities. So, and at the center of that wheel is data. So how you store your data, how you use that data, and how you protect it with security measures. And that breaks out into the different capability areas of North that you see there around data platforms and cloud and analytics and intelligence and security. Surrounding all of that is our applications capability. We have a number of managing agents in Lloyds who use our policy admin system called Index Insure, and our sanctions checker application is widely used across the industry as well. And for cyber risk assessments, we use the Risk Exchange platform. So moving on to the topic for today, I'd like to introduce Darren Craig from Risk Exchange.
Thanks, Richard. So I'll just switch screens here. Just do that. Okay, so hopefully everybody can see my screen, which is good. So good morning, everybody. My name's Darren Craig. As Richard says, I'm the CEO of Risk Exchange, and I have the pleasure of taking you through what sort of good looks like when it comes to a third-party cybersecurity risk framework. It's one I certainly have been using for many years prior to setting up Risk Exchange, and it's sort of been refined over many years. So hopefully everyone gets some value from this, and they're able to take away some useful pieces of information. So Risk Exchange itself, just to cover that off quickly, Risk Exchange is a SaaS-based platform that allows organizations to manage, monitor, and assess cybersecurity risk across their own sort of external footprint, but also that of their suppliers. And really the job of the platform is to try and make it as easy as possible to assess this risk on an ongoing basis, on a continuous basis, and not have to revert to using things like spreadsheets and manual processes and trying to chase people down, etc. So we'll cover some of these points off as we go through this. But really the topic we want to cover out this morning is the Lloyds minimum standards around specifically third-party risk management and there's a number of them within the standards themselves, but I'll just touch on some of the high level ones. As it says here in the standards, the agents are responsible for developing policies and processes, and our experience shows that most third-party programs have the policies in place, but they don't have the implemented processes. Also responsible for categorizing those third parties into the common way to do them is into tier 1, tier 2, or high risk, low risk, or high risk, medium risk type buckets, so to speak. Agree security arrangements with your third parties, and we would really encourage any organization to ensure that they have good dialogue with their third parties when they have discovered some issues, and work together to resolve those. And then continuing to assess those ongoing security capabilities of your third parties and the risk impact potentially to your own organization. The interesting Portamon study as well, which sort of highlights why it's important to have these standards. 53% of organizations have suffered some form of security breach by their third parties. So again, this is really happening today, and sort of again highlights why that's important to have these standards in place. So when you start to look at a third-party sort of ecosystem risk program, one of the ways we do it is we hold a workshop with a client, and we go through this sort of what the current state is, and what does good look like, and then we identify some of those gaps and offer up some advice and ways to address those. When we looked at some of the findings from previous workshops, and we've held many of these workshops across organizations like yourselves, but a whole range of organizations, some small and some large. Lack of awareness is a big challenge when it comes to third-party risk. A lot of organizations are really not aware of the risk they're taking on board when they bring on a new third party, because they don't have any process in place to carry any due diligence, or that due diligence is maybe just something that's carried out at the beginning. Lack of continuous monitoring tends to be a big problem. Again, going back to manual processes, organizations typically would onboard a new supplier and carry some form of assessment. But unfortunately that isn't continued. So there's no continuous view of what that risk profile of that particular third party looks like. And really the downside of that for the organization is that they're inheriting the risk, they're accepting that risk, but they really don't have any visibility of it. Lack of resourcing tends to be one of the big things that comes out when we talk to some of the clients that we work with. They struggle to get investment from their senior management around this. So they're always looking for ways to try and to decrease that workload and look for ways to automate that. So again, we can help with that with Risk Exchange. Fourth party is a reasonably new space. It's evolving. I must say it's very early days right now. Organizations are sort of still struggling to try and get on top of their third parties. But we are starting to see some companies looking to understand what their fourth parties or their subcontractors of their third parties are doing. And this is a key requirement from GDPR, and it's something that must be addressed as part of your GDPR requirements. And then the typical way that we see when we talk to customers or potential customers is that they're currently using spreadsheets before they start using Risk Exchange, but they have really no way to validate that information. They're having to take that information at face value. So there's no third-party independent verification of that information at all. So again, it makes it hard to assess what level of risk you're actually taking on board. And then drilling down into some of the things that we cover on a workshop, or we hear back from some of the attendees at the workshop, is that the greatest challenges are validation, which I've just covered off, getting third parties to remediate the issues, And I think this is really important when it comes to the dialogue. It needs to be good. The relationship needs to be good between you and your third parties to ensure that any issues discovered are remediated quickly. The other thing we tend to get fed back here is assessments just taking way too long. We have had some examples of companies waiting for up to 6 months for a response from some of their third parties. And again, this can be for a number of reasons. Typically, some of the manual assessments we have seen have been so large. I'm talking 200 to 300 questions. It generally requires a wide range of stakeholders within the suppliers organization to answer those questions, and this can be one of the reasons why this takes so long. Lack of a standard framework. There seems to be a huge deviation across lots of different companies in terms of how they do that and what standards they're actually measuring against. Is that Cyber Essentials? Is it ISO 27001? Is it NIST or European banking standards, etc.? So there's a whole range of standards at play here, and it's difficult to know which one to hang your hat on, so to speak. Again, awareness and third-party tiering is a challenge. If somebody was asked you the question today, what risk is this organization to your company, and how would you place them? Which tier would you place them into? Would it be high or low? It can be a difficult question to answer sometimes. And then just to wrap up on this particular slide is the cross-functional element of it. We see too often third-party risk is left to maybe security or IT or in procurement, but it's really important to have that responsibility across the organization. It's not any one team is fully responsible for this. It's a multidimensional challenge, really, and it's important that all parts of the organization are involved in that. We'll cover that off in a bit more detail. So when we start our workshop, we sit down to look at how companies are currently doing third-party risk. This is really where we start. So we say, what does the program look like? And we sort of break that into 3 different areas: the foundations of the program itself, the assessments that are carried out as part of that program, and awareness of the third parties themselves, who they are, what types of third parties they are, what risk profile they are, etc. And then the operations element, where typically this tends to be the area that most companies are weak on when it comes to third-party risk management. They tend to do very well when it comes to policies, writing up the policy, and they have some awareness of their third parties, but they tend to struggle a little bit when it comes to process and getting those assessments rolled out and getting the feedback, getting the validation, being able to report that very quickly or in a continuous way up to the senior management within the business. So again, operations tends to be one of the weaker areas, and we'll talk about that a bit further on. So the starting point here really is the framework. It's really important that you have a structured framework around this. In too many cases we see that it's sort of ad hoc. There's no real joined up approach to it or framework. And this should always start with analysis. Look at the third parties, carried an assessment through a collection of data. That could be internal information you're collecting on the third party, or it could be external data collected from a platform like Risk Exchange. And then really, once you've discovered any particular issues, then to engage as early as possible with that third party and agree on a remediation plan. Again, I've sort of highlighted this a few times now. It's really important to have that strong dialogue. And then, when you look at a third party, there tends to be a lot of issues you've discovered. Some of those issues are low risk, some of them are high risk. But again, it's important to get approval and an agreed approach in terms of what needs to be fixed first. Sometimes it's not really worth the effort from both the supplier or you to spend time trying to resolve low risk issues. It's obviously more important to focus on the more critical issues. But document that with your suppliers and make sure that you're both agreed on that, so that the supplier isn't going off to fix something and you come back and say that's not really reducing our risk. And then putting a program of monitoring in place. This is extremely important that you do have continuous monitoring, because third parties, they might be good today, or they might be good at the point of onboarding, in the onboard ramp into the organization. But what happens the day after that and the day after that? The risk profile changes. Digital infrastructure is so dynamic nowadays. Companies can spin up new services at will from the development team, etc. So it's important that you have a continuous monitoring process in place. So just touching on the cross-functional element of it, the challenges we tend to see here, just drilling into these in a little bit more detail, is there's no cohesion between the different departments, if you like, or teams within an organization. And that typically would involve procurement, legal, maybe risk, and security. They're the sort of key stakeholders within any third-party risk program. It typically starts with procurement. They would handle the process of carrying out the assessment and maybe the monitoring. And then there may be some involvement, in terms of drawing up contractual requirements from the legal team, and then maybe some risk and compliance oversight as part of that. And then it's important also to have security involved in this going forward, because security tends to be an escalation point. It's not something you would involve, a team you would involve every single day, unless there's an escalation point, unless the profile of the third party, the risk has increased. There tends to be no common processes. That's typically what we see. So it's important to think about that and build that cross-functional team. So where do you start? Which teams do you start? We've already mentioned legal and procurement. But when you start to look at your third parties and discover who those third parties are, they tend to be spread across the whole organization. There's no one place that has all of the third parties. You could argue that the third parties will all be held in the sales and purchase ledger, for example, in finance. That's potentially one area. But that really doesn't take account of shadow IT challenges, maybe people in marketing setting up their own suppliers, paying with their own company credit card, etc. So it's important to try and do discovery across all of these different areas. HR, finance, marketing tends to be a big one, and really then build a collection of all of those third parties, who they are, and then you can start to really understand, what is the dependency on the business. What is the risk impact to the business if one of these suppliers has a particular breach, and what is their current state when it comes to security? And this really feeds into the awareness across the business. We would always encourage the workshops we do. We would always encourage a lot of these departments to join this workshop and feed into that process. And really, what that does, it helps build awareness. What is a third party, or what is a vendor? There tends to be a lot of misunderstanding around, is a vendor the same as a supplier? Is a vendor a particular hardware computer supplier, for example? Are they a processor, a data processor? Are they not a data processor? So there tends to be a lot of confusion around this. But again, it's important to bring everybody together to build that awareness. And these are just some of the types of companies you should always be including in your third-party list. Cloud service providers, managed IT services companies, and that might be a company that doesn't, you're not using their product, but they're providing professional services. They're logging into your organization to provide some level of support. So again, they should be included. Any software companies, and that includes SaaS software companies, as well as on-premise software providers. Any web providers, website hosting companies, things like that. Any logistics companies that have maybe connections into your systems that allow, transfer of data in terms of the maybe movement of packages or something like that. And analytics, again, analytics tends to be quite invasive. It tends to be pulling a lot of internal data out of an organization, but in a lot of cases, what tends to be missed is that that data maybe is being pulled into some sort of external SaaS application, and that's, you know, what is the risk of that? What if that analytics company had a breach, for example? What would be the impact on your organization? So once you sort of build that awareness around your teams, you know, through a workshop environment, we tend to think works best, but it can be done in a more informal way. Once you've got that list of vendors across all of the different departments, then you really need to start and sort these vendors into silos or groups, as we tend to call them in Risk Exchange. You know, the only way you can really assess the risk is to look at the vendor themselves, carry out some form of initial risk assessment, ask hard questions in terms of what if this vendor was to have a breach, what type of information do they process for us? And it might be outside of the scope of GDPR. You know, they might be processing personal data, but they may also be processing company confidential data, intellectual property information. So again, it's important to look at all of these things when you're assessing the vendors in terms of where they sit within their tiers. We would always sort of suggest these three tiers, but there could be more, or there could be less. So tier one vendors tend to be critical to the business function with potential network access or sensitive data sharing, and that could be personal data. You know, so we obviously have a requirement under GDPR, but it could be confidential information. The next level down then is important vendors that may have access to the company data, you know, like a support company or something like that. They would tend to be tier two. And then there's a long tail of smaller relationships or vendors that, you know, maybe the risk isn't just as great. So you would tend to split them up in this way. Then we get into the sort of risk assessment piece of it. And it's also important to say that whenever you went through that initial piece of work of dividing your suppliers up into their groups, it's really important that you don't go out and try to assess all of those vendors in exactly the same way. You know, a tier one vendor would not necessarily be assessed in the same way as a tier three or a tier two. So it's really important when you're looking at your assessments that you do take that on board, because a tier three vendor tend to be smaller vendors in a lot of cases, not always, but they tend to be smaller vendors, and they're not able to, they don't have the resources or the, you know, or the time even to respond to these sort of security questionnaires. So again, look for other ways to collect that information on their smaller vendors, rather than have to send out questionnaires of maybe 200 to 300 questions and they have no idea how to answer them. And they're not as relevant, obviously, for a small company as it maybe be for a large organization or for a company that's providing cloud services versus on-prem. So there's different profiles you need to feed into this assessment process. But some of the challenges when it comes to the assessments themselves is, you know, it's very hard to get good quality responses from these vendors. Sometimes there's a question raised whether can we really trust the responses we're getting from these vendors. You know, can we really trust in that data? Can we believe that data? You know, in some cases, what we see in some of the sort of analysis we've done of some of the assessments traditionally come back using spreadsheets, for example, is that those responses tend to be canned. So we might see the same responses coming from a number of vendors within an organization. And that typically sort of points to somebody's just pulled that response off the internet and they've just sent it back as part of their response. So again, obviously that can't be trusted. And then you need to really start, you know, looking for independent information that can validate what they're telling you. Things to do when it comes to this is, you know, ask questions that determine the existence of a control. That's really important. You know, control might be access control to a system that you're using. So a firewall, do they have a firewall? It's a simple one. But again, when you look at any standard, ISO 27001, NIST, you know, Cyber Essentials, they're all built around a controlled requirements. So again, any questioning or any probing of results, make sure you're really trying to establish, do they have that control in place or not? Try to limit the questions about policies. And really, there's not a lot of need to do that. You know, most companies have good policies nowadays. Typically, what we would ask them is to provide a list of the policies that they currently have. And if they haven't provided a particular policy that you would expect to see in an organization that size, then it's a pretty good guess that they don't have that particular policy, and that's why they haven't provided it to you. But again, these documents that you're asking for, you know, they may be reviewed at the onboarding stage, or depending on the risk profile of the company you're assessing, or you know, they may need to be reviewed on an ongoing basis. So, you know, how do you do that? What's the process for doing that? You want to do that on a continuous basis. So how do you do that? Is it a quarterly cadence? Is it an annual cadence? Is it backed up by any form of audit process? So these are all of the questions you need to think about when you're building out this program. Sticking with the theme of assessments taking too long, as I've already touched on, assessments take weeks or months in a lot of cases, and they tend not to be leveraged pre-contract. And what I mean by that is, in a lot of cases, the vendor is onboarded because the business needs that vendor onboarded for a particular reason, but it's only then that the assessment process starts. Really, it's too late at that point. The contract's in place in a lot of cases. So it's really important that whatever assessment process you have is put in place pre-contract, not after the contract is signed. That's a common challenge we see. So when you're looking at, again, things to help in this is the process you currently have. You know, I would encourage you to break that down and look at it and you know, ask yourself the question, why is it taking so long? Can we improve that? Are there ways we can use automation to improve that, or use independent third-party data to improve that process? Again, try to leverage the data you have internally. In a lot of cases, there is internal intelligence, you know, across the business that can give you some indication of risk from a supplier. And you know, again, align your timelines around how often you should assess the vendor. Should you audit that vendor? Is it once a year? Is it, you know, every couple of years? It really depends on your risk appetite. At the end of the day, these are only recommendations. The risk appetite is decided by you and by your organization, and every organization has a different risk appetite. So one of the ways to speed up the whole assessment process is this sort of 5-step process that we have developed. And you know, the first step of this is really to establish the rating, the tier of that particular vendor, you know, using the methods I've already covered. So if you're starting with you know, like, we know this vendor is a tier 1 vendor, or we know this vendor is a tier 2, at least that allows you to assess them in the right way. Then what we would normally recommend is you go off and gather some internal information, carry a brief assessment. And I don't mean send the vendor a 300-page questionnaire. I mean, use some of the information you have internally in the company, pull data from a platform like Risk Exchange, for example, which will give you an up-to-date picture of how that particular vendor is performing when it comes to cybersecurity risk. And use that information pre-contract before then moving forward in the contract process. Then what we would encourage you to do is once you've got a risk rating effectively around this particular company, then set a threshold that's acceptable across the business. You know, so in Risk Exchange, for example, that threshold could be 7, maybe 800. The range on the assessment is 300 to 900. So you might decide 800 to 7 to 800 is good enough to move forward in the contract process. But ask yourself the question, what happens if that particular score for that vendor falls below that? Do you move forward in the process? We would always recommend you don't. So again, it's important to establish what the risk thresholds are. You know, what means green to go to move forward in the process. Maybe there's a halfway house where they're put on probation and they have to fix the things that they should be fixing in order to you know, be retained as an ongoing supplier. And maybe if a vendor comes back with a really poor score, for example, then they would, you know, that process would stop at that point and would have to be assessed by security. So there's a number of different ways you can speed up this process. Because the key thing here is to gather the data as quick as possible, make the assessment, measure that against your appetite, whether you're happy to move forward with that particular vendor, escalate it to the security team if that's something you need to do, and then make a decision: do we move forward to sign a contract at that stage? But that pre-contract piece of work can be done very quickly, and I'm talking about maybe 24 hours. A maximum 48 hours, and that allows you then to go back to the business and say, well, we're not happy with what we're finding here. We would need to look at this in a bit more depth and carry a deeper assessment. And that way, the expectation of moving forward with that particular vendor is being managed. So continuous monitoring is a big thing. We tend to see a lot of gaps when it comes to this. A lot of companies are using one-off processes or one-off assessments. They send out an assessment and they never ever look back. Worst case, they never look back. In some cases, they look back at that assessment maybe once a year and have to go through the whole process again. Whereas really what you want to do is put a process of regular monitoring in place and alerting that alerts you to any particular changes in their risk profile, and then maybe carry an annual audit or a biannual audit. The other thing to keep in mind is breach monitoring. Companies under GDPR obviously have a legal requirement to inform you as their processor that they have had a breach. But they're not required to inform you necessarily if they're just processing company confidential data. You would hope that they would, but in a lot of cases organizations tend not to publicize that breach too much. So again, it's important to try and put in a process of monitoring for breaches, monitoring the press, things like that, to see if there's been a particular breach has been discovered. Monitoring the dark web is another common method to use to see if that company's had a particular breach. And again, risk exchange can help you do these things. Executive management information. We see too often here that the reporting is too technical, it's too long, it's not summarized, it really doesn't talk about the risk to the business. So again, bear this in mind when you're pulling together your sort of dashboards for your senior team in terms of these are our suppliers, this is their risk profile. And you want something that's easy to do, right? You don't want it to have to start the whole process of spending months or certainly weeks anyway, building together this dashboard, which has to be redone every time you want to send a report to the board. You want a process in place that and a way to do that automatically so you can effectively just press a button and get that information without having to go through the whole manual process of building every time. So again, that's something that we can help with. Third-party comparison, just wrapping up now. Third-party comparison is a sort of an area you should definitely explore. It can be very difficult to do, but there are tools that allow you to do this. In Risk Exchange, for example, you're able to pull in up to 5 other companies from the same industry and compare how they compare to the supplier you're looking at currently. And that way, what it does, it gives you a detailed benchmark of how that particular supplier is comparing to their peers within their industry. And again, that helps you understand the risk. Are they performing below the industry standard? Or are they well above that? Or are they just average? So again, this is important information. And we can provide this information right across all of the key domains, network security, application security, encryption, etc. So just wrapping up, we have I touched on it a few times now. We have a workshop. It's a free workshop we offer up to any organization that's is concerned or they feel maybe there's a little bit more work to do when it comes to third-party risk. And right now, typically the workshop used to be physical, but now it's virtual and it's done across Zoom, so it's pretty straightforward to run with your teams, even if they're remote. And we would, sit down with your teams, go through all of these sort of key elements, of what does good look like when it comes to a security program, compare that to what your current state is, take on board any concerns you have around that, and make some recommendations in terms of how you can move that forward. and address any issues we discover, and give you a sort of written up gap analysis around that. So hopefully everyone's found that useful. I'll just switch over now to, I think we have a couple of questions here, so I'll just pull these up. So just more of maybe a comment. Another challenge is there from one of the audiences. Another challenge is the requirement from audit to assess the response from the questionnaire. Exactly, this is a challenge, and this is why it's important to try to collect independent and verifiable data. In Risk Exchange, we collect data on hundreds of thousands of organisations every day across the UK. And all of our data is validated from at least two sources. So again, the audit would be able to use that in this case to get some, I guess, assurance and confidence. The other question is how do you manage big vendors like Microsoft and SAP? Again, this is classic challenge we see every day. Unfortunately, if you're using a traditional approach of sending out an assessment, organizations like SAP or IBM or Microsoft or Amazon, any of those organizations will not respond to your assessments. They're a large organization. They get too many of these types of responses to respond. So one way to deal with that is to use a risk rating tool like Risk Exchange. And that allows you to carry out an independent assessment of that organization's digital footprint and get a better idea of how they're performing and use that score. And then, look to establish some relationships with the relevant departments within that business and feed back any information you're finding. So again, that way you get some level of assurance of that organization and their current cybersecurity risk profile. Okay, so I think that's all the questions for now. Richard, I'll just hand back to you.
Great, thanks, Darren. Yeah, all the questions are in and done. So thank you for those from the audience, and thank you for attending. Hope you found it useful. And what I'll do is I'll drop you all an email just so you have contact point if you wanted to pick up the discussion further. Perhaps think about the workshop that Darren talked about for your organisation. We'll be able to run one of those to give you the outline of a framework to work to. Thank you very much, and enjoy the rest of your days.
Thank you.
Bye.